Morning, guys. It's Monday, November 10th, 5:23 a.m. Central Time. Grain markets are higher across the board this morning. December corn futures up 2.25 at 429.5. January soybeans up 5.5 cents at 1122.5. December Chicago wheat up 7 at 534.75. December Kansas City wheat up 6.5 at 525.75. December spring wheat up 1 at 559. Let's start off with Trump and his stimulus plan.
In a Truth Social post on Sunday, President Trump said all Americans except high-income earners would receive a $2,000 tariff dividend. Any such payments, however, would likely require congressional approval. He added that tariff revenue would also be used to help pay down the nation's $37 trillion debt. The announcement comes as the Supreme Court reviews the legality of Trump's tariff policies.
Let's go to the Truth Social post. He said this: people that are against tariffs are fools. We are now the richest, most respected country in the world with almost no inflation and a record stock market price. 401ks are the highest ever. We are taking in trillions of dollars and will soon begin paying down our enormous debt, 37 trillion. It's 38. Record investment in the USA, plants and factories going up all over the place. A dividend of at least $2,000 per person, not including high-income people, will be paid to everyone. So that was one of his proposals over the weekend. Scott Bessent went on TV and very quickly walked this back. And I think he was terrified of the whole thing. And he's like, it might come through a tax cut, so they're not all together or on board with this. And then the other thing Trump is floating now is this 50-year mortgage idea. And the Trump administration is supposedly moving forward with this plan to offer home buyers a fixed rate 50-year mortgage. I'll tell you what this all reeks of is inflation. I ran some statistics today, and I will get to the grain market implication here in a second. So if you assume 150 million Americans qualify at $2,000 each, that's $300 billion in stimulus, basically. And we know what happened with regard to inflation the last time we did this, right? It wasn't good for the inflation statistics. Looking at the mortgage numbers, if you assume that half of all U.S. homeowners or mortgage holders refi, and I think it'd be more than that. I need to quit this and get in the mortgage refi business if this happens. If you assume that half of them refi, you're going to free up $90 to $100 billion per year in additional disposable income. So I think that both of these ideas, whether you like them or not, stimulus, $2,000 checks, 50-year mortgages, they're all hugely inflationary by nature. Now, you guys can look at this chart and you can accuse me of a chart crime, if you will. But corn prices tracked inflation very, very closely in 2021 and 2022. And I will never be convinced that inflation wasn't at least part of that rally. There were some fundamental factors, certainly, but there were absolutely some large money managers and funds in there buying corn, soybeans, and wheat just because inflation was running way too hot. When CPI got up to 8 or 9%, that was around the same time when it peaked. That was around the same time corn prices peaked, and I don't know necessarily that that's a coincidence. So if all this stuff happens, you go to $2,000 stimulus checks, you do a 50-year mortgage, you're going to run into more inflation. And Trump said there's almost no inflation. That's not true. The CPI is still 3%. It's still a full percentage point higher than the Fed's stated target, even though I think they're now more comfortable with like a 2.8. I mean, for the farmer, inflation, has a lot of different impacts and things like that. But I think if you ran into big time inflation again, probably be a net positive, honestly. So I don't know. There's a lot going on here. I'm not a big fan of either of those policies, but we'll see what happens.
A bit more on President Trump. On Friday, he called on the DOJ to investigate the meatpacking industry, alleging that packers are engaging in manipulation, price fixing, and collusion, actions he says are driving record high beef prices. Trump previously launched an antitrust investigation into the industry during his first term, though that probe yielded no results. Beef prices have climbed in recent years, largely due to the U.S. cattle herd shrinking to its smallest size in 74 years. The Meat Institute, which lobbies for packers, defended the industry, saying it is heavily regulated and that market transactions are transparent. USDA data indicates that the packing industry is facing significant losses, which are expected to persist into next year.
So Trump, again, active on Truth Social, and he talked about how some people were blaming the ranchers, but that was him. He was blaming the ranchers.
Yep.
And now he's shifted the blame to the packers, which is maybe more warranted. I threw this chart in this morning, which I thought was interesting. So most of the time, I think when we talk about beef prices, we talk about like the boxes. I pulled the Bureau of Labor Statistics data on ground beef that they use in the CPI numbers. So based on that, ground beef 100% in the cities is up 63% since the start of 2020, where the actual all CPI food index is up only 31%. So yeah, beef prices have been a little bit hotter than everything else. You could probably argue, though, that maybe they were too cheap for a little while, and that a lot of people would say that for what it is, it's still not expensive. Mackenzie, what are your thoughts?
I believe in the past there may have been reasons to investigate the Packers, such as during the COVID situation. I think in this situation, you cannot point the gun at the Packers. They are losing anywhere from $200 to $300 per head. And also, as I've said in the past, the beef market, it is a supply and demand driven market. Our U.S. cow herd is at its lowest level in 7 decades mainly because of drought and then producers dropping out of the game. So I don't feel like this is going to yield any results. It is just the Trump administration looking for someone to blame when it comes to beef prices and find some way to bring down prices, I believe.
No, that's the wrong answer. People want you to
Yeah.
attack the Packers. They want you to be
I
furious.
know. And that's the thing. I'm going to lose a lot of friends over that statement, but my goodness, I feel like as ranchers, we're going to lose credibility. The Packers are losing bucket loads of money. On this side, we're making pretty good money. Trust me, I hate what the market has done in the past 2 weeks. That drop off, that sell off should not have happened. But it's because of the Trump administration. If the Trump administration would just stay in its own lane, we wouldn't have these crazy things going on within the market, in my opinion.
Mackenzie, you're not a meat packer apologist, but your take is accurate.
Thank you. I appreciate that.
Yeah. This is a beef-related story that I thought was interesting.
Yep. So Texas Roadhouse is forecasting higher commodity costs through next year. The restaurant chain projects that costs, primarily driven by rising beef prices, will increase about 6% in 2025 and 7% in 2026. Commodity inflation reached 7.9% in the third quarter, putting pressure on profit margins for the third consecutive quarter. To help offset these higher costs, the company raised menu prices by 1.7% last month. Despite the cost pressures, same-store sales at Texas Roadhouse restaurants rose 6.1% in the third quarter, surpassing analysts' expectations of a 5.3% gain.
Higher commodity costs, big beef buyer, of course. Texas Roadhouse in suburbia, USA, where I live, is the place to be. Like, you go to Texas Roadhouse at 5 o'clock on Saturday night, you're not even getting a table. You got to show up at like 4 and put your name in, and then you're going to wait an hour. So if you're looking for a recession signal, when I can go to Texas Roadhouse and not wait an hour on Saturday night, maybe that's your recession signal. Texas Roadhouse has also been the place to be with regard to the stock market, or one of the places to be. It's outperformed the S&P 500 since the start of 2020. Texas Roadhouse up 164% since the start of 2020, the stock, and the S&P is up 108%. It's really phenomenal. And there's like, as far as like retail restaurant chains, there's really not anything else like it. It's got its own vibe that people really like, I guess. They got the country music. It's pretty chill. People love Texas Roadhouse.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
On Thursday, I ran through futures and options trading fees explained, and included a spreadsheet where you could punch in your own numbers, commission rates, and figure out exactly what it costs you to trade. I think most people don't know, or at least half of farmers who trade futures and options probably don't know what their commission rate is or how much it costs them to trade. I was in the brokerage business for 20 years. I understand a lot of this, and I made this available. On Friday, Ryan Moe was on, and he was quite literally wearing a tinfoil hat, and he talked about a crazy corn yield theory, among other things. We also did basis and spreads, and that's really Ryan's wheelhouse. But this was interesting stuff. And we do have a USDA report out on Friday, and the government may or may not be reopened by then. There was some progress toward ending the shutdown over the weekend. We are not there quite yet, but we will see a report on Friday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We just love to send you all of our content every day. Our morning email goes out at 5 a.m. Central Time, jam-packed with charts, graphics, videos. Midday email blast is our video for that day that goes out at 10 a.m. Central Time. This is super easy to do on your phone. You can sign up on your phone in 30 seconds. You can just click to play the videos on your phone when you get the emails. There's no login instructions or anything like that. Give that deal a shot this morning, guys.
China has eased trade restrictions on U.S. soybeans. The nation will reinstate soybean import licenses for 3 U.S. firms, CHS, Louis Dreyfus, and EGT, starting November 10th. The licenses were suspended back in March amid escalating trade tensions. Investor sentiment has improved since a new trade truce was negotiated between President Trump and Xi Jinping in South Korea. Beijing recently lifted certain tariffs on U.S. farm goods and made modest purchases of U.S. wheat and soybeans. Despite these developments, traders remain cautious about whether China will fully follow through on its purchase commitments.
Yeah, so one of the comments that a Chinese official made last week was along these lines. He said that China's going to encourage its companies to buy U.S. ag products, but basically, like he said, if it's along with the principles of the market, meaning, I think, if U.S. grains are competitive versus Brazil or whoever else, then yeah, we'll buy them. And as it stands right now, Brazil's kind of competitive versus the United States. So I don't know if this whole 12 million metric tons before Jan 1, it's still in question. And I think China's bought some beans. I don't know exactly how much. I don't think it's 12 million metric tons. Is it coming? Is it not coming? We don't know. I hope the government does reopen, because I really want to see these export sales reports and see what's been done and what's being done while the government was closed.
The funds were net buyers of the soybean market last week. According to average estimates provided by Reuters, funds were net buyers of 7,000 soybean contracts. Despite making purchases on Friday, the funds finished the week flat in the corn market. Amid the government shutdown, we can only use estimates from private groups in order to guess the net positions of the funds.
The funds are probably still net short the corn market to the tune of 40 to 60,000 contracts. The funds are probably net long an aggressive amount of soybeans, probably 100 to 150,000 in that neighborhood. They're probably still net short 50 to call it 80,000 of SRW wheat contracts. Those are just guesses, basically, that the private groups throw together. And the longer the shutdown goes on and the longer the private groups are left guessing, the more off they're going to be. So I don't know. It's probably close-ish to reality. They're probably still short some corn, probably long soybeans to a maybe significant extent, probably still short SRW wheat. Details we'll find out when CFTC reopens.
The EPA has granted biofuel waiver exemptions to some refineries. HF Sinclair and Phillips 66 received full or partial exemptions from biofuel blending mandates at certain refineries, while Chevron's exemption requests were denied. The waivers apply to annual ethanol and biodiesel blending obligations dating back to 2021. The agency said the exemptions were given to refineries facing economic hardship. Biofuel producers criticized the move, saying it threatens renewable fuel demand and creates market uncertainty. Refineries and biofuel producers are awaiting a final EPA decision on whether large refineries will be required to blend additional renewable fuels to offset these exemptions.
Pete Myers, our resident biofuel expert, asked him about this. He said, "It's nice to see the Chevron denial. Disappointing to see Phillips 66 and Sinclair get exemptions. I don't think it's a market mover, but more exemptions for companies that size is a bad precedent." And it is, but probably not enough to move the markets or biofuels or anything like that. What did cattle do on Friday?
Cattle futures were actually higher on Friday. Live cattle were 205 to 325 higher. Feeders saw gains ranging from 27 cents up to 435. Fat cattle trade was steady to lower last week. In the Texas Panhandle, cattle were $3 to $4 lower compared to the prior week at 232. In Kansas, cattle were $3 to $5 lower at 232. Up here in Nebraska, cattle were unevenly steady, settling right around 230. And then over in the Western Corn Belt, cattle were mostly $2 lower at 228.
Stock market's higher this morning. The S&P's up 59 points. That's about 0.9 of a percentage point. Some people are saying it's up because the government may reopen. Maybe some people are buying it because they're worried about inflation following the Trump comments over the weekend. I don't know. Crude oil's up 8 cents, 59.83, still under $60 in the December WTI. Gold's up $81. Big move there. Have a great week, guys. We'll be back on Tuesday.